With so many new investors flocking to crypto to potentially look for newer and possibly better returns, it's important that we understand all of our options, so then whenever we're actually going to make our crypto investments, that we make the best decisions for our portfolios going forward. Hey guys, it's Tanner Manson from Future Investing, and today I want to go over all the intricacies and important information that you need to know whenever it comes to investing in cryptos, whether it's the actual coin or token, such as maybe Bitcoin, versus the actual publicly traded exchanges, such as something like Coinbase, for example. But before we go any further, although I am actually a licensed financial security advisor as my full-time job, none of these stocks or topics that we talk about today are in any way my recommendation. This is merely my opinion, and you can choose to do what you wish with this information. Now, if you could, hit the like button, it really helps out the channel, and subscribe down below if you want to see more financial content just like this. So, like I said, just as any examples that we're going forward, any coin or token, we're going to be using Bitcoin, and for any exchanges that we're talking about, we are going to be using Coinbase just because it's a publicly traded company and the largest publicly traded exchange at that. Now, to really start off the debate of which is better, the actual coin or the exchange, you have to understand that whenever you're buying Bitcoin, you're buying it at present value. You don't buy it with any expectations that the price is going to rise or anything along those lines. Whereas whenever you're actually buying the exchange, you buy it with what's called a price to earnings ratio, or a multiple on the amount of money that they actually make. This means that if the sentiment around Coinbase or Bitcoin is very, very positive, that they could buy Coinbase before those prices actually rise, which might actually make you pay for the actual, increase before it actually happens. And for example, whenever we look at Coinbase, that they have a 17 times price to earnings ratio, which means whatever amount of actual earnings that they earned within the last 12 months, that they would need to earn that for 17 years straight for them to make up the actual price of what their stock is worth. Obviously, I'm not waiting 17 years just to get my money back, but the assumption is that the company will grow over time, making those price to earnings ratios quickly drop, faster and faster and faster. But whenever we're talking about earnings, that's actually a funny thing that I want to talk about, is that whenever you're actually holding just Bitcoin as the currency, it doesn't actually earn you any money. It doesn't do anything. It does have utility. There's an ability to actually have a spendable currency or something like this, but the only way that you'd ever make interest on it or make any sort of money on your Bitcoin would be doing things through other applications, such as loaning them out. But whenever you actually own Coinbase, the opportunity to make money is actually business related. The business would make money with things like transactional fees, custody fees, lending, interest rate farming, Coinbase Cloud, Coinbase Card, the list goes on and on. Now you might be thinking, what makes more money? The actual growth from Bitcoin, or the actual transactional fees and custody fees that, Coinbase gets from actually transacting them on their exchange? And this question is such an amazing one, and it's the whole reason why I actually wanted to make this video in the first place. The idea is really this. So I'm going to go to my job, for example, as a financial advisor. Let's say if I had $1,000 of my own money and somehow the market makes, let's say, 10% for easy math, okay? Then I've got $1,100. I've made $100 on my money, I'm a happy camper. But let's say as a financial advisor, for example, I manage $100,000, just for easy math, okay? And then that amount, let's say, pays me 1% a year. So I get $1,000 from that $100,000 that I manage. Now, the funniest thing is let's say that, the market goes up 10% on my $100,000 of, managed money, okay? So now I manage $110,000. But then next year comes around and I go to take my 1% cut, and I go to take that, and now I get $1,100. So regardless if I'm able to have $1,000 and the market goes up 10%, or if I'm able to manage $100,000 and the market goes up 10%, the amount, my actual outcome is about the same. And this affects all markets. This isn't just stock markets, this is also in crypto. So for example, if Coinbase manages a ton of money versus, one individual investments like their own wallet, if Bitcoin was to double, the actual transactional fees that Coinbase was to be able to get would also double. So they would stay parallel 1-to-1. So the idea is, regardless, is if you're holding Bitcoin or you're holding Coinbase, and this could be with any business at all, whether you're holding corn or you're holding a farm, okay? Or if you're holding gold or you're holding a mining company, the benefits from those commodities going up is going to affect the actual exchanges. And this doesn't even include, more customers coming to Coinbase, or the existing customers within Coinbase, increasing the amount of money that they have within the platform, or any of the dozens and dozens of factors that just add to the multiples of earnings that Coinbase could add to their business, like adding different cryptocurrencies, for example. Whenever you own Bitcoin or something like this, you own Bitcoin, okay? Whenever you own the crypto exchanges, the more cryptos that they add onto them, it doesn't matter what coin is exchanged, we still charge a transactional fee. And I mean, it's not all great for Coinbase. There is also, the opposite side of it where, our marketing campaigns or paying wages or potentially, people going to a different exchange would not affect the price of Bitcoin, but it does affect Coinbase. The idea being that if Coinbase in general or a single exchange is not able to actually satisfy their customer, and then people are actually, wanting to leave, that could actually expedite how fast, they could lose in the markets, because if Bitcoin is also going down during that time, then the chances that Coinbase might go bankrupt would multiply even faster than if you just held the coin. But I mean, Coinbase has been growing at an amazing speed, way faster than Bitcoin, for example, because there's also other things that they can do that expedites how fast they grow. For example, custody fees, which means they'll go to other companies like Tesla, for example, and say, hey, we'll hold that Bitcoin that's on your balance sheet for you. If you ever come for it, we can give it to you, but we'll keep it secure on our platform. But of course, we want a little price for that. Then there's also the argument of, let's say Bitcoin just staying stagnant for a year, which it sort of has within the last couple months. The price has just been sort of going up and down and hasn't really broken through a new record. But let's say it stays stagnant for a year at $50,000. Obviously, there's going to be fluctuations up and down, but let's just say that for easy math. If you were a Bitcoin holder, then you would have made $0 throughout that year. But if you're looking at from Coinbase's side, whenever Bitcoin is actually staying stagnant, that they're still getting the transactional revenues because, people are still exchanging the coins. They're buying and selling. There's traders all over the markets, everything like this. They're still making their money. So if they're still making their profits, they might be able to, pay off debts, increase amounts of money, try to get new consumers or everything. But if the market's fully saturated, maybe then they have a dividend, okay? Whenever they have too much cash or a company has too much cash and they don't know what to spend it on, they pay it out to their actual shareholders. This is why Warren Buffett always said that he never wanted to hold on to something like gold or anything. He would rather buy up farmland, something that continues to produce year over year over year. If the price of the crop goes up like Bitcoin, great. It still benefits the farm, but if it doesn't, then they're still going to be able to make money, get their dividends, and be able to actually profit on the coin or, commodity or anything over time anyways. But then that leads to the next super big argument, and that's taxes. Taxes is so important whenever it comes to the argument of Bitcoin versus the actual crypto exchanges. Now, obviously, legislation around this is practically changing every single week, and I do have an audience that's based in, Canada, United States, and all over the world. So it's very hard to talk about taxes because we're all over the world, but for the most part, Canada and the United States, there's a lot of capital gains whenever there's a price increase on Bitcoin, and then the rest is treated as income. Now, this differs a lot, so please bear with me, but for the most part, capital gains does have a large tax advantage. You don't have to pay all of the money, but the other half, income, is usually taxed at the highest degree. And there's not a whole lot of places you can put your Bitcoin or any sort of other cryptocurrency that allows you to take tax advantages. In fact, it's actually a huge problem because, the Bitcoin does go against these large institutions and everything like this. If you take away, the pricing power of the United States dollar and people have a place to run, obviously, the Bank of Canada, the Federal Reserve, all these things, they are not going to like them taking away their financial power. So they want to tax cryptocurrencies at the highest degree. But whenever we're talking about securities and publicly traded companies, there are lots of tax advantages. Now, obviously, like I said, this is going to differ from country to country and everything like this. But for the most part, whenever we're talking about America or Canada, there are things like Roth IRAs or tax-free savings accounts that are able to hold, actual securities like Coinbase and not be able to actually, have those taxes on the capital gains, the dividends, or be considered income. Large tax advantages across the entire board whenever it comes to owning publicly traded companies. For the most part, governments like investors and people that are willing to, put their money back into the economies. Now, obviously, that's another huge check mark for me in terms of Coinbase and wanting to own that, because obviously Bitcoin, let's say they both times by 10, okay? That's going to be a huge, huge tax bill whenever it comes to me actually cashing in my Bitcoin versus Coinbase, where I might have bought it in my tax-free savings account, for example, and all 10 times of that money, whatever it leads to, would be 100% tax-free here in Canada. Now, if I'm not mistaken, and I could be because I'm not American, it's quite the same thing with the Roth IRA. Now, if you're actually looking to transact in one of these cryptocurrencies, for example, then there's absolutely zero utility whenever it comes to Coinbase. Whereas the actual cryptocurrencies that you're buying are huge tools to, send money across borders, these sorts of things. They pay extremely low fees, things like this that actually lead to real utility. Coinbase is merely a stock and it's merely an investment. So if you're also looking for your investment to also lead to some utility and be able to transact it and send money and these sorts of things, then there really isn't an argument between owning Bitcoin versus Coinbase. If it's simply about earning money, there might be a case about actually owning the exchanges, because if there's stagflation, for example, or just, a stagnant Bitcoin price, Coinbase is actually still going to benefit just because, they could still bring on newer customers, they could still bring in new money and actually become the dominant exchange, versus Bitcoin, where the price wouldn't move, you would not benefit at all. Now, for me personally, I do own a bunch of Coinbase stock. In terms of the actual cryptocurrencies, I don't really own any. I probably own, $40 worth on, Coinbase, those earn programs, that how they teach you about crypto and you slowly earn money or whatever like this. I really only downloaded the app just to see the actual product of the, the company that I'm investing in. I would like to see how the, the app works, how slow it is, what are the features, these sorts of things, just sort of get a hands-on with the product. But aside from that, really, I do not care about the tokens at all. I never wanted to hold a commodity. I've always wanted to hold the business. And Coinbase is an amazing business ran by an amazing, super successful CEO. There's really only like 3 CEOs that I think are just standing leagues above the rest of them that I've looked into. And I mean, this is like Mark Benioff from Salesforce, Toby Luckey from Shopify, and then there's Brian Armstrong, obviously, from Coinbase. And Brian Armstrong, for example, being extremely young, and I think he's going to be around for the company for an extremely long time. And they are in the financial services department, so the actual ability to grow the business is a very clear-cut, idea. They know how to do these things. What they're actually doing with Coinbase is nothing different than the actual banking service has done, except they're doing it with a new commodity, a new currency. They're going to be able to follow roadmaps of businesses that are managing trillions and trillions of dollars. And the amazing thing about financial services like this or money management is that the cost that it takes to manage $100,000 versus $1 trillion is actually not too far off. But the actual payouts versus managing $100,000 to $1 trillion is leagues and leagues apart. And so that's the funniest thing I think about what's amazing about, Coinbase going forward, is that I get to buy into this company that, for example, I don't know why, is at only 17 times PE ratio. This is lower than actual normal banks. But yet the actual commodity that they're actually, insuring practically is so much more volatile. I can't believe that it's not like at 100 times PE ratio or 170 times PE ratio, something like a Square that has Bitcoin on the balance sheet, and that people are putting a lot of that towards their prices, but not Coinbase. It doesn't really make sense to me. Anyways, guys, I'm really going off topic. I think I have so many thoughts and opinions of Coinbase itself. I think, I'll have to make a video on just what I think about the company and how I, go about it, because I think there's so much uncertainty about the company. And whenever sort of these sorts of environments happen, I find this is really whenever you find the next sort of huge unicorn of a company. Whenever you find those 10 to 100x stocks is whenever real uncertainty and people don't know what's going to happen. But even just the fundamentals of the company, just investing on the true numbers. And we'll go over that in the next video. I really appreciate you guys watching this far. I mean, it really is amazing that we're sort of building a community on this channel. So I love it that you guys are, supporting it and, leaving comments below on what you like to see next, or my opinions on anything, or just sort of, put any random question or comment that you'd like. But if you haven't already, like the video down below and subscribe if you want to see more financial content just like this. Anyways, guys, thanks so much for watching. Stay safe trading. I'll see you guys on the next one. Bye for now.